But anyway, Kenzi, take it away.
Awesome. Cool. Can you hear me?
Yep, you sound great.
Great. Screen's good? All right, cool.
Perfect.
All right, great. So I've been asked to talk about how to bootstrap liquidity in the new age. Great to be here. I'm Kenzi. So this is me. I graduated from Columbia, studied computer science and math, and then went on to Warren for my MBA. Spent a few years in tech, founded a company that it's backed by Y Combinator and also New Enterprise Associates, which is a big Silicon Valley VC in the MarTech space, before moving on to Huobi, where I spent quite some time as VP and also GM, ran the exchange operations, BD, and also the venture side of things at Huobi, where I learned a lot about the exchange business, how token investments and also listing should work, and which then led to investing in a lot of projects through AU21, which is a DeFi and also an NFT fund that's quite active. I'm also co-founder of Cere network, which is about to do a public sale at the end of the month. And then meanwhile, I'm also a partner at HNT fund, which is a helium fund. So that's me. So these are some of the companies that I actually was very fortunately involved with and invested in. So just taking a look at today's agenda, actually was very happy to see that some of these attendees are, actually companies that I invested in, like, Plasm, Reef, Injective, Monta, Polka Starter, and such. So very proud to be here. So a disclaimer here is that I'm not a farmer. Actually, I got asked to talk about this topic just a few days ago by Alex. So I'll try my best to talk about it, about liquidity side of things. So what is liquidity? I want to give some context here. Is that think about liquidity as essentially like in a social network. Very similarly, if you don't have a lot of people in the network, you really don't have a lot of value. So think about liquidity the same way, is that when you have a lot of liquidity in the market, then actually produce that value. So there's a few different kinds of liquidity here. First, there's money market. So in the lending, borrowing market, enabling lending and borrowing. So you need to have lenders available in the pool, and then borrower can come and borrow. And then there's AMMs. So you have trading between buyer and sellers. And then the traders will trade against a pool of tokens, and that's liquidity pool. And then lastly, you also have synthetics. So that's providing collateral based on a decentralized oracle, based on certain kind of formula you can create and also back different types of synthetic assets or derivatives. So let's move on here. So then what is liquidity pool? So it really started out with Compound, which is the first liquidity pool. So instead of lending assets directly to another user, you can supply liquidity to a market now, and then users can borrow from that market. And then in extension from that, you have three different kinds of dominant AMMs, and that's the automatic market maker. You have UnitSwap, Balancer, and also Curve. Each of them are operating on different sets of math model, like UnitSwap, which is more on the Ethereum network with a 50-50 ratio. Curve, which is specializing in stable coins, which offers the best rate. Balancer, and that's offering a dynamic liquidity pool of up to 8 different type of assets. So it's more flexible that way. So in any of these cases, you bring the liquidity and you produce yields, and then you become part of the ecosystem. So how do you bootstrap liquidity? So you gotta start by offering incentives, and that is the notion of liquidity mining. So this is a quick overview of some of, just actually only on the BSC network, these are the liquidity farms, which is actually pretty pretty interesting. I just looked them up last night. I saw a lot of really interesting names. So a lot of food, a lot of drinks, and a lot of animals. So you can see there's thugs, there's pho, UFO. It's pretty funny stuff. Anyways, so all of these EO farms, they have problems, and that's why there's so many of them. They keep come and go. So the main issue with it is that there's the huge imbalance between yield and rewards. And that imbalance is produced because as more users come to the marketplace, the yield then go down, and then the rewards per unit of liquidity would go down. So then, which means that when people mine your tokens, and then they'll start to start selling them into the spot market, and your token price will fall. So you really have to balance out, balance both sides of the marketplace out. It's also not very sticky because of it. So people keep come and go from one protocol to another. So from FUD to FUG and then to the next one. It's not very sustainable. It's also very high cost and slow because most of them are on Ethereum, and that's due to the infrastructure. It's got impermanent loss, and also you can easily get rugged. That's a very common theme here in these farms. And the main problem for these farms is that it really lacks a fundamental and value proposition. It doesn't really create anything that's unique and differentiated, so it doesn't stick. So the solution here is that really need to focus on providing a good user experience, so that increases retention of the users in your marketplace. It also has to have a very good fundamental and value proposition. So, for example, UnitSwap, Curve, and also Balancer, they have really differentiated value propositions for different sets of users. So you really have to think about a good value proposition here. It also needs to have a good incentive design so that the marketplace is balanced. It also has to be based on very good technology. So maybe something that's new, like BSC or Polygon, things like that. So that's some of the solutions that you can have. So let's talk about how do we bootstrap liquidity now in this new age here. So one example is a Goodwill Referral. So you can get initial batch of users by airdropping. So for example, Badger DAO did an airdrop of Badger tokens to Gitcoin users, and that received a lot of good sentiment. So it drove growth in the Badger DAO network. So that's a really great way to bootstrap your initial batch of users and also bring liquidity in. Another way is forking and incentivizing. So a good example of that is Sushi Swap. So Sushi forked UnitSwap, and then on top of that, they provided really good incentives by giving away Sushi tokens. And that forced UnitSwap to come up with their own token and launch quickly into the marketplace. Another way is by incentivizing your early liquidity providers. And that's exactly what UnitSwap did. So they incentivized their early users by airdropping to all of the UnitSwap users. And this way it creates a great amount of retention in the network and also brings more liquidity. Another way is your backers. That's really important. So that's why a lot of early stage startups that we work with are looking to get backers that also can bring liquidity. So these are some of the very common ones, like Multicoin, like Three Arrows, Galaxy. They can all bring a good amount of liquidity to your network. So it's very important to get big OTC DEX and also backers involved from early stage. So another way is by using developer toolkits. So a lot of trading desks and also liquidity providers has automated APIs that companies can instantly bring a large amount of liquidity by giving these large institutions that can provide algo arbitrage to bring in liquidity very, very quickly. So Here's another way is that you can also build on top of other protocols. So for example, you have DeFi Dollar that launched a Curve pool, which is built upon the Curve protocol. That instantly brought a lot of liquidity from Curve. So that's something to think about, is you can build on top of other protocols that can bring liquidity to you. And so another way is that you can also design rewards that have lockups, because a lot of these farms and also protocols, they're sending out rewards that don't have lockups, and that creates a lot of downward pressure. So one way is to counteract that by offering lockups. So for example, EasyFi did a great job by offering rewards that has a 30-day lockup, for example. So you can design something that's not just 2 months long in terms of the incentive structure. You can design something that's maybe yearly long. So that way it's more sustainable. And lastly here is ecosystem play. So a great example of that is PancakeSwap that's on BSC. So instantly draws a lot of attention and also brought a lot of liquidity from the BSC network onto PancakeSwap. We recently looked at another company that's very similar. It's called MakiSwap, and this one is built by the Unilayer team. They're doing something very similar to what PancakeSwap did to BSC, but this one is Maki, but it's for Huobi Hiko chain, which is very exciting. So we're very excited to back them and also see what can come out of it. So these are 8 ways for companies to bootstrap liquidity in this new day and age. So that's it. So yeah, thank you very much.
Thank you very much, Kenzi. Let's see what we got in terms of questions. Yeah. Let's see if anyone has questions, drop them in the Q&A box. Let's see if there's anything that are interesting here. You did cover a bit of BSC in your presentation. So the first question here is, how does BSC and ETH competition affect the Polkadot ecosystem?
Actually, I saw a lot of excitement in the Polkadot ecosystem from September on till January. And myself is a big, Polkadot believer. I invested in Polkadot and a lot of, the dot ecosystem projects. You can see, that's why a lot of the attendees here, their companies are also, I'm early investors in them. But I think BSC is really making a huge impact from end of February and also March onwards. It's not too long ago, but they're making a lot of big movements now. So that is incredibly exciting because there's more competition. And at the same time, I also see Polygon as a sheer force that's going to come into the play, because I think they are coming up with something that's very groundbreaking. Rebranding from Matic to Polygon itself is a big statement to the world that they're no longer just a layer 2 solution. They're going for layer 1. And they're also coming up with a multitude of things like, parachain and stuff like that. So I'm seeing more and more projects, especially initially in the NFT space, to be built on Polygon. And next thing is going to be the DeFi ecosystem built on Polygon. So I'm actually looking at a lot of those companies as well. So in a nutshell, yes, competitions are coming. I see Hiko coming up. That's why we invested in MakiSwap. We're seeing the Polygon ecosystem rising. QuickSwap is doing a great thing. There's going to be a lot of new exciting tech that we build on all of these ecosystems. So that falls into the category 8 that I was talking about. That's the ecosystem play.
Mm-hmm. Awesome. Let's see here. Question for you in the chat. Bootstrapping liquidity in ETH L2's Matic XDAI has proved substantially more difficult, I guess is meant to say, than on ETH main chain due to the bridging steps. how would liquidity bootstrapping work differently between parachains as a more like native layer 1 solution, for example, Equilibrium to Akala?
That's a great question from Marlin CEO Sid. Thank you very much for asking that. So that's why we need solutions like Marlin to come in and help bringing more ecosystem players in the space and bridging that gap. That's it's a very good question there.
Great. Let's see here. Other questions in the chat. Others that are, I don't know how well you know Dfinity. Someone's asked how Polkadot is different from Dfinity. Are you familiar with Dfinity's architecture at all?
Actually, not too much about Dfinity. Yeah, that's I know they're coming out pretty soon, but there's a lot of excitement about it. But they've been baking it for so long and very secretively, so I can't comment too much about what they're doing now.
Yeah, I can say a couple things. I mean, it's not really a blockchain. It's like a new system of data centers, basically, that they have proprietary hardware in that runs some level of cryptography to secure it in a somewhat decentralized way. And then there's, I think, like just a DAG attached for transactions. But it's not really a blockchain in the way that you think of like Polkadot, Ethereum, Bitcoin being a blockchain. It's just sort of like a network of nodes out there for you to like run applications on, but it's uncertain sort of like who runs these specialized pieces of hardware. And like you said, it's all closed source, so you don't know anything about how the hardware is designed. It's all proprietary, or the software is designed, because it's all proprietary and closed source. So it's hard for anyone to know what they've been working on, really. They don't say much.
Yeah, I remember reading them branding themselves as an operating system rather than a blockchain. So yeah, it's very exciting to see what they have built so far.
See if there's anything else here in the chat. I can also sort of answer some of these questions. Someone asked, what is Polkadot doing to prevent governance to be controlled by a few exchanges, etc.? Is there a protocol that could be written so that to prevent this from happening? The short answer is yes. There's a lot of things that have been baked in to Polkadot governance to prevent minority rule. First of all, if a exchange is using the DOT that you own but are keeping on exchange to vote in governance, I'd say users should speak up and say that they're not okay with exchanges using those funds to vote in the exchange's pure benefit. But that said, there's a lot of mechanisms built into voting on Polkadot when controversial issues come up that allow or ensure that there is not this concept of plutocracy where few folks are able to leverage a large amount of the token supply in their favor. There aren't as many whales in Polkadot compared to other protocols. Have been very cognizant to ensure the distributions are fairer than what we've seen with previous proof of stake and proof of work network launches. And then beyond that, there are actual voting mechanisms that ensure that if there's one group or one individual who's trying to push something through governance that goes against the will of the broader community, smaller holders can actually multiply their vote up to 6 times by time locking their DOT on the relay chain to multiply their conviction for or against a proposal. So that also adds as a barrier to sort of minority plutocratic rule on Polkadot. And then just also broadly in terms of how governance is designed on Polkadot, you really see those issues of big holders being able to swoop in and change outcomes when the voting system and the governance system is very simple, straight token voting up and down on referenda. Polkadot's governance system is much, much, much more complicated and thought through than a simple token voting mechanism. When we talk about governance, there's multiple bodies of actors and stakeholders in governance that have control over different levers of Polkadot and the ability to protect against malicious attacks like proposals that might be damaging to the protocol. So I think capturing a Polkadot governance is much more complicated and closer to impossible than it would be in a simple token voting scheme. What do you think? Do you have any thoughts on Polkadot governance?
For me? Or?
Yeah, so I mean, this could be a good question. Just like, so we talk about stakeholder groups emerging in Polkadot governance, and you could certainly see a need for advocacy on behalf of the broader Polkadot DeFi community in relay chain governance to positively impact a change that would be good for DeFi. Groups like the Polkadot DeFi Alliance could help fill that role. So do you have any thoughts on like how DeFi teams on Polkadot can and should engage in governance?
Yeah, that's actually a very endearing topic that, and that's why the Polkadot DeFi Alliance was actually born, was by, seeing how there's different pockets of the Polkadot ecosystem here. And then that's why Valeria and Min, who I work with very closely, they started to to come up with that idea, and I really kind of pushed for that direction as well, for that to happen. So now it's becoming more of a DAO setup. So I'm really proud to see that it's growing so fast and also receiving a lot of prominence overseas as well. So I really hope to see more and more of these governance structure that arises, whether it's by itself or it's organized in some other way, pushed out from the the Web3 Foundation perspective, maybe to kind of bridge some of these gaps that's currently not filled.
Yeah, totally. Excited to see how it builds out, and once more people get involved in governance and like all these stakeholder groups bring their opinion to the table in a really robust way. We spent a lot of time in Ethereum, and it's just a mess whenever there's a conversation around any change to the protocol. We got a couple more minutes here. Someone just dropped a question in. Do you agree that NFTs can help to bring more awareness to crypto?
Yeah, absolutely. I think what we're seeing right now is there's a lot of hype about NFT, but at the same time, it's also a conduit for more mainstream awareness to be looking at these digital asset. Some of them don't even know it's crypto, but it's great for adoption and bringing a different sets of users that is outside of, for example, the crypto hardcore DeFi traders or EO farmers, right? So it's great for crypto to be seen and also to be used, and also it bridges the sort of the physical world as well to the crypto space in general. So really excited about it. I personally also am an avid NFT investor that I invested in, for example, Axie Infinity, Terra Virtua, and also a lot of the new Polygon powered games NFTs, for example, Chain Guardians, crypto, Ethermon, things like that. So personally, very excited to see NFT space growing so fast, and also seeing a lot of new tech that's now built on different chains. For example, on BSC, there's Refinable. On Ethereum, there's OpenSea, and then there's going to be more coming out on the Polygon as well. So the sky's the limit from here.
Awesome. Thank you very much, Kenzi, for coming today and sharing your thoughts with everyone at PolkaDeFiance. Have a good one.
Thank you very much.